I did a vote count right before I came on the air, and I think this does get the 60 votes it needs in the Senate and overcomes any potential filibuster. Now,
big news in crypto today. The U.S. House is set to unveil its long-anticipated Stablecoin Bill as Congress accelerates the legislative process. If passed, this bill would introduce long overdue regulations for stablecoins, potentially reshaping the entire crypto market.
So this bill is currently going through the Senate. It passed the Senate Banking Committee 18-6. I did a vote count right before I came on the air, and I think this does get the 60 votes it needs in the Senate and overcomes any potential filibuster. Now, I think this bill will pass sometime between May and July, and what it does is it sets up stablecoin issuers to be regulated either by the feds or by the state authorities and requires them to have 100% high-quality liquid assets. But most importantly, it brings regulatory clarity and loosens up enforcement risk so that these issuers and these tokens can then operate in the United States going forward.
And the impact, absolutely massive. If this bill passes, it unlocks the entire U.S. capital market for stablecoins, paving the way for unprecedented liquidity. This could be the next major catalyst for crypto, just like the two market-moving events that drove prices up at the start and end of 2024. But are those catalysts over? Not so fast.
Okay, so let's talk about 2024, right? So in 2024, we had two big catalysts. We had ETF buyers. If we look at the ETF buyers based on 13F filings from December, majority of those are firms that are farming the basis trade, right? They're not long-term holders. It's not mom and pop going out and buying in their brokerage account.
Explain how that works.
Okay, so basically how it works is people are buying the ETF and then shorting Bitcoin.
Okay.
So they're capturing a basis spread. If we look at MicroStrategy, convert arbitrage, right? It's convert arbitrage, great strategy. MicroStrategy and IBIT have been propping up that complex. They've been the predominant buyers, and they now hold 6% of the Bitcoin supply. So a lot of growing concerns are at a potential black swan if that trade unwinds.
Meltem Demirers makes a compelling point. Some fear-mongering around a black swan event might be overblown. What she's really asking is, what's the next big driver? Now that the ETFs have been integrated into the market, their buying pressure is simply business as usual, priced in. So what's next? The stablecoin bill could be a game changer, especially for Ethereum, Tron, Solana, and Binance's Smart Chain, BSC. Even Donald Trump is backing stablecoins. Breaking news, his crypto venture, World of Liberty, just launched USD1, a stablecoin deployed on the BNB chain. That's a clear signal. Trump wants this bill passed. And let's not forget the sheer scale of this market. Hundreds of billions of dollars already circulate through Ethereum, Tron, Solana, and more. Meanwhile, Ripple's XRP ledger is making waves with its own stablecoin, RLUSD. In fact, today's headline reads, Ripple stablecoin RLUSD surges 319% in 24-hour trading volume. Why is this happening so fast? And keep in mind, this is all before regulation kicks in. If stablecoins gain official backing, we're talking about a market that could balloon into the tens, maybe even hundreds of trillions. Bloomberg Intelligence's Nathan Dean breaks it down further.
Nathan, what do you see as the big difference when this bill becomes law versus before it becomes law, if it indeed does become law?
Well, for the issuers in particular, it's going to mean much more in terms of costs. Probably think about tens of millions of dollars in terms of compliance costs for these issuers. Now, the issuers are going to be happy to pay it. It means that they are not going to be brought up on enforcement violations or anything like that because, even though the enforcement risk apparatus is much lowered today because of the changing guard at the SEC, unless that law changes, nothing prohibits a future SEC from coming back and saying, hey, you're operating against the law. Here's an enforcement action for your trouble. So I think the issuers are going to pay more money, but it also brings more acceptance to the idea of stablecoins in the United States. The one area that I think is not going to be happy with this is community banks. Because if you think about it, like where are you going to get the money for stablecoins? If I decide to put more money into stablecoins, it's most likely going to come out of deposits. So that could come up as an issue as we see this debate go into the bigger, broader Senate, but I don't think that's going to be an issue that stops this bill from passing.
And there's more. Chainlink is making moves too. They're working on their own proof of stablecoin bill. I'll share a key clip, but first, let's revisit the charts. As I mentioned earlier, the dreaded death cross is looming. A death cross occurs when a short-term moving average, typically the 50-day, falls below the longer-term 200-day moving average. Historically, this signals bearish short-term momentum. And while it's a trailing indicator, it usually precedes a price drop. Look at past cycles. July 2024, the death cross appeared, but the real price drop had already happened leading into it. Same pattern here, here, and here. So what's happening now? 8 days later, the 50-day MA is still on track to cross below the 200-day MA. Meanwhile, Bitcoin is moving upward into the cross, likely because there's no immediate catalyst in the next 4 to 6 weeks. The Stablecoin Bill, at least a month, maybe 2 before it's finalized. Could this lead to another sell-off? Some might argue the dip already happened. Bitcoin dropped from 98,000 to the high 70,000s. Maybe that was it, but let's be clear. No one can predict Bitcoin's price tomorrow. If someone tells you they can, they're lying. The reality? Traders control short-term market moves. Fundamentals dictate long-term value. We'll keep tracking this. And here's something even bigger. Chainlink just confirmed they're working with lawmakers on a bill called Proof of Bill. If passed, it would legally mandate stablecoins and real-world assets to prove reserves on-chain. Translation? Chainlink's technology could become a regulatory requirement.
The proof of bill that we're working on with a number of other legislators and their staff and other groups here in DC is really focused on proving that the real-world assets that are backing a coin, whether it's a stable coin, whether it's a tokenized fund, whatever the coin is about, that those assets actually exist. And that proof about them existing doesn't happen on an annual audit basis, doesn't happen on a monthly report basis in the form of a PDF that, is very unclear. It's not very clear how anything was verified. But it happens on a second-by-second basis. So it happens in near real time. And beyond happening in near real time, you can drill down into the details of the underlying asset. So you wouldn't just know that it's treasuries. You would know that it's treasuries. You would know that it's 2-year or 5-year or 10-year treasuries. You would know the yield on the treasury tranches. You might even know the custodian with which those treasuries are held.
This is next-level innovation. Forget traditional stablecoins. This is a complete upgrade. Blockchain technology can ensure proof of reserves, transparency, and trust with some of the biggest players in finance backing it.
So the proof of bill and our work on proof of across different asset types will really allow for the most reliable assets to come out of the U.S. financial system. And just like the U.S. legislated into existence risk agencies, we think it should legislate into existence this proof of bill to make sure that the financial products generated in the U.S. system are fundamentally better and fundamentally more reliable because they require this high level of proof of information. And this goes very well and in line with the current model of what makes the U.S. financial system reliable, which is highly reliable assets with a certain level of regulation and information requirements. This is basically just continuing that, but doing that in an on-chain way that massively benefits the consumer, the market, and eliminates systemic financial risk. So this is what we hope the work we're doing now on the proof of bill will help us achieve.
Most people still don't grasp how transformative this will be. The stablecoin era is just getting started.